Yes, good evening, guys. Hope you are having a wonderful day today. Yeah, I've always wanted to be sharing. Yes, good evening, guys. Hello, yes, guys. Hope hope my sound is much clear now because I'd got an interference. This session is being live streamed, and I think the sound was echoing back because of the sound that was coming from the live. Yeah, I would want to have a volunteer that I'm going to be communicating with in order to have a smooth run of this session. This session basically is to explain the easiest way on how you can approach the market, foundational basics, or we call them baby steps or baby movements that we can use to identify the market before we happen to involve the issues of indicators, looking for entries, just to easily understand, read the market in a basic, pure price action way. Yes, my name is Ibrahim, normally known as Odin. Yeah, I'm the CEO of Odin Forex Academy. Yes. I have been quite so busy in the previous months. I couldn't handle mentorships. I couldn't provide proper signals. I couldn't provide my services well because I was trying to set up something. You know, when you're trying to relocate, there's a lot of things that are going on. Yeah, I was in the process of relocating from my home country to Dubai so that I can run my services at least globally, not only focusing on my people in the country alone. Yeah, so I'm going to try my best to provide you with the service that I expect to help you guys in your Forex trading journey, to maybe Forex or trading journey, just to guide you or share the knowledge that I have with you. Of course, this knowledge will be free, of course, for the basics. The basics are always given out freely, unless if for those who want to have a proper advanced way how you can approach the market and become more profitable, then you will have to reach out and have a separate session, call it a session or a one-on-one. Yeah. Right now, I'm not handling any mentorship, general mentorship. Yeah, apart from those who I had not given proper service during this period, I would like to excuse, to ask and to excuse, I would like you guys to, I would say, I would like to apologize to anyone who came out, wanted the service, and I failed to provide this service well because of uncertainties, when you're up and down. Yeah, but I promise you will have the best out of it. Something that has been packaged well, something that has been planned well, and it will definitely be worthy the wait. Yeah, so I want us to reach the issue of the market. Let's try to understand how we can approach the market in the best way. We all know what Forex trading is. Forex trading, of course, is the buying and selling of instruments with an aim of making profits. We buy when we expect the market to go high. We buy when we sell when we expect the market to go low. And of course, we do the analysis, and the most important is market structure. Yesterday, we had a session and it was explaining what market structure is. We explained what market structure is, if you all remember. I don't know if somebody was yesterday, if somebody was active, you can try to come out and volunteer. Just explain briefly what we studied yesterday. Because today I wanted to look at something else. From market structure, what can we be looking at that can help us have a better view or a proper bias on where we expect the market to go next, so that we can look at what our entries may be or where we can find our entries. So who is available? Anyone available? Just by raise your hand. Those who are the session is shared in Zoom in the Telegram channel. There is the Zoom link where you have where you can request to speak or something, or you can even send a chat message. Then we explain. So, is there anybody? Okay, somebody is willing. Let me unmute. I'll unmute, then please, I've requested you to unmute. Then you can unmute, then you come out and explain what work.
Hello?
Yes, how are you?
Good, bro. How are you doing?
All good.
Yeah, thanks for the opportunity. So yesterday we discussed market structure.
Yeah.
Yes, we got the definition of market structure. We got the three types of market structure, the uptrend.
Mm.
We looked at the uptrend making higher highs and higher lows, right?
Yep.
Then you took us through the real chart examples. It was gold.
Yeah.
Yes, you showed us that it isn't obvious how it's drawn with the higher highs and higher lows. Of course, the market plays some tricks most of the times.
Mm.
Yes, but most of the time we have to be on the side of the trend to avoid and counter trending.
Yeah.
Then we looked at the bearish market structure, the downtrend,
Yeah.
making lower highs and lower lows, just same as bullish structure. The market isn't obvious. It makes violent pullback sometimes, but all in all, a bearish trend is always obvious also.
Yeah.
And to be precise, and in bullish market structures, we always look for highs, and bearish market structures, we always look for sales, right?
Yeah.
Yes. Then we discussed breakout structures. This is when price breaks a previous high, for example, in bullish structure.
Mm.
Yeah, uh, signaling to us a strong bullish trend that maybe enables us to enter the markets and participate in the bullish trend.
Yeah.
Also looked at a change of character.
Mm.
Yes, both in bullish conditions and bearish conditions. That's roughly what I managed to write as notes. Thank you so much.
Okay, thank you very much. Thank you very much. Okay, yeah. So that's what we looked at. Guys, we said when we are looking at the market structure, we enter the market looking for the direction of the market, where we expect the market to go. Either it's going up or it's going down. So in the market structure, it's always three types of market structure that we have. We have the structure when the market is moving to the upside, forming higher highs and higher lows. Here, the mindset that we shall always be having is to look for buys, and we don't fight the trend. So if the market is moving to the upside, we only look for buys. We don't tend to sell. However, due to psychology and well, of course, the challenges that we face, we want to make money so quick. We tend to fight the market without patience. But in reality, if the market is going to the upside, you just have to be patient and wait for the market to come back, give you a pullback, then you enter. Because when we are buying the market, we always say we buy low and we buy low. So we are not going to buy the market when it's at its high point, because the market is giving us higher highs and higher lows. So we want to buy when the market is at a higher low. So whenever there is a low, that's when we buy. So the market has to give us higher highs, higher lows, higher highs, higher lows, and we buy at these lows. So meaning if the market is at the point of high, we wait for it to come back to the low, then we buy. Just another way on how I can explain that using a trend line strategy. Once you confirm that the market is moving to the upside, so the market will be forming the higher lows at the trend line. So whenever the market is not at the trend line, you wait for it to come back at the trend line. Just like this, if the market is giving us higher highs, we want to wait for the market to give us a higher low at the trend line, then that's when we buy. So when the market comes to touch the trend line and indicates that now it's going up, of course, the indications are seen at the chart when the market gives us candlestick formations that indicate that the market is going to go to the upside. If we are using candlesticks as our entry confirmation, then we use candlesticks. We use candlesticks like the bullish engulfing, like the pin bar. So once we see that formation at the trend line, that's when we enter, targeting the most recent high as our target and have a stop loss, of course, below the pattern formation or the candlestick formation. And we shall be looking at that in the coming sessions. So in the uptrend, we buy, and in the downtrend, we sell. So in the downtrend, the market is giving us series of lower highs and lower lows. And if the market is giving us lower highs and lower lows, of course, we are going to sell at the lower highs, not the lower lows. Because we buy low and we sell high. So we want to see if the market is at its highest. So if the market is in a downtrend, we shall be having high points as well. So these are the high points, or we normally call them pullbacks. So if you're using the trend line strategy, of course, you will be seeing this, the market coming back to touch the trend line after giving you a new lower low, then that's when you enter, and always the target can be the next, the previous lower low that you have on the chart. Then that's how we continue. But today, we wanted to look at, of course, after looking at market structure, we want to look at the market nature, the nature of the market. Because when we are trading, we are always in a probability. Which probability? It is either a buy or a sell. What we are always looking at is either a buy or a sell. Buy or sell. It has to be either of the two. Either a buy or a sell, because the market is either bullish or bearish. So either of the two. So after confirming this, there is something that we want to look at. That's the market nature. In the market nature, the market is always moving in a certain, it's moving in, I call them two phases. We have the nature phases that the market is moving. The first phase, we have what we call the impulse phase. The impulse phase, this is when the market is moving with high momentum in a certain direction, just like this move here. So what are the characteristics of this impulse phase? We have these high momentum candles like this. These are the high momentum candles we are talking about. So if you see the market having such kind of candles that are moving, big candles moving to a certain direction, unlike small candles packed together, just like this. So I hope we can all differentiate between these two images, or the ones that I've circled here. We have this one here and this one here. This one, let's call this A, phase A, and this is phase B. The market is always moving in two phases. So it's always you who is going to take your time to learn and understand or be able to spot these phases that will help you to anticipate what could be the next move of the market. The market will always move in two phases. We have A, which is the corrective phase. Call this corrective phase, or call it the consolidation phase. The consolidation phase. Then we call this the impulse phase. Understanding this in a kids, I would say in a kids way, we are having candles here, small candles packed together in this phase A. Then we are having big candles going in a certain direction, that is phase B. So the difference between the two is, in the impulse phase, candles are moving in a certain direction. So the market has decided which direction it's going. In a corrective phase, the candles are packed together in a certain range, or in a certain formation whereby the market is undecisive. So the market here is undecisive. It's either going up, down, up, down, up, down, up, down, up, down, moving, giving us equal highs, equal lows in this phase. Then in the next phase, the market is of course moving in a certain direction. So this consolidation phase is when the market is in undecisive phase. It's not deciding which direction is taking. But in the impulse phase, the market has already decided. So if you try to zoom out, you can look at the bigger picture here. You can see that the market is giving us these phases. We have the impulse phase, then we have the corrective phase, as you can see. Then we have a corrective phase here. We have impulse, we have corrective, whereby we have so many candles packed together. We have impulse, we have corrective here, candles packed together. That's how always the market moves. If you can happen to zoom out, you can see that. You can observe it on even other pairs. You see that the market moves to a certain direction, then gives us that phase when candles are packed together. It gives us the big candles, then it gives us those candles that are packed together. Gives us the impulse, then gives us that phase when the candles are packed together. So we want to understand what's the logic behind this. So the logic behind the impulse phase is that the market has already decided which direction is going. It's either going up or it's going down. That's the impulse phase, just like this phase that we are seeing here. This phase that we are seeing here. Here, the market has already decided. It can even be seen by a child who is 7 years that the market is going down. In the corrective phase, it can even be seen as by anybody. Like, you can easily identify that now the market has refused to tell us where it's going. It's just moving up, down, up, down, up, down, up, down, up, down, up, down. It's confusing us. We don't know where it's going next. Look into all these small candles that are moving, because this happens on all time frames, whether big or small, whether higher time frames or lower time frames. You can see the market moves, then it packs candles. It moves, then it packs candles. It moves, then it packs candles. So what's the logic? We said the logic behind the impulse phase, the market has already decided where it is going. Then the correction phase is that phase whereby the market is now planning which side I should go. So as a trader who wants to know where is the market going, where is the market deciding to go next? That's where we want to look at. That is the corrective phase. So in this corrective phase, the market has not decided. It's either the market is, I want us to put attention here. It's either the market is continuing in the previous direction, the same trend as it moved, or it's going to discontinue the trend and reverse back. So we want to look at continuation, or reversal. We all know what it is. If we say that the market has continued, it means it is just following the same direction as the previous direction. If you say the market is reversing, then it means it was moving left, then it's going right. Or the market was going up, then it's going back down. That's what reverse is. So if you're driving on the road, going at point B, from point A to point B, if you are to continue the same direction, that means you have to continue to the other side. So this is, I don't know if everybody's, people are really understanding this, guys. If you don't understand, those who are in the Zoom, you can either raise their hand and ask a question, or you can type the question in the chat panel. But I want us to understand this phase. During the impulse, the market, let's use a road to understand this. We have point A and point B. And we have point C, we have point D. So we have gaps in these areas. So this is what we are going to call the breathing phase, or the continue, or the consolidation. So the market moves impulsively with high momentum candles to a certain direction. Then it packs candles. Then it moves, then it packs candles, it moves, it packs candles. So we say whenever it is packing candles, that's what we call the correction phase. So the correction phase has two major key points that we need to understand: continuation and reversal. These are the decisions that the market is planning to take. It's either going to reverse or it's going to reverse. It's either going to continue or reverse. So if we said the market is going to continue, meaning it will breathe and continue the same direction. Breathe, then continue, same direction. But if we say the market is going to reverse, so meaning it will move from point A, then reverse to back from B to A. That's a reversal. Whereas the continuation has to continue to another point, which is point C. Guys, have we understood that? Are we all understanding? Please just use a thumbs up. Good. Yeah. So this illustration that I've used here is just to illustrate, just for us to understand. But the market doesn't move like that. The market moves up, down, up, down, up, down, up, down. So we say if the market is continuing in the same direction, meaning it's going to continue in the bullish direction. So what will happen is the market will give us an impulse phase, then correction. Impulse, correction. Impulse, correction. Have we understood? Then if the market is to reverse, then it will have to give us, if let's say it has been in an uptrend, then it wants to reverse, then it will have to give us a correction that indicates a reversal, that it has moved from point A. The market moved A, B, then C. When it reached C, it had to reverse back to B. So meaning it has to give us a signal that now it's going to reverse back from C to back to B, because that's how the market moves. The market will go in a certain direction, then at one point it will have to reverse. It will have to reverse back, which we call a change of character. Those who saw or those who attended yesterday's session. I hope we have understood that. So this phase of the correction, where the market gives us continuation and reversal, whenever the market is in the correction phase, I want us to understand that it has what we call patterns that it follows. The same way you see that the market moves in two phases or patterns of, if the market is in bullish, you will have to see the same patterns of higher highs, higher lows. And if the market is in bearish, you'll see patterns of lower highs, lower lows, because always the market repeats what it has done previously. So when we are in the consolidation, we are either having continuation patterns, or reversal patterns, So we have these continuation patterns or reversal patterns. For example, one of the patterns that we have for continuation, we have what we call a flag, whereby the market will move from the upside, it does the correction, and it continues to the same direction. That is a reversal pattern. Then for the case of us, this is the continuation pattern. Then for a reversal, you'll find the market giving us this formation, which is a head and shoulder. So we have a shoulder here, we have a head, we have another shoulder, and we have what we call a neckline. So the market will move to the upside, packs candles to form a head and shoulder pattern, which indicates reversal. Then you'll see the market reversing back. So from uptrend to downtrend. Inversely, the same thing that happens if the market is in a downtrend first, then uptrend. So the market, if it goes in an uptrend first, it will give us an inverse head and shoulder. Inverse head and shoulder, that is an upside down head and shoulder. So we have a shoulder here, we have a head, we have a shoulder, we have a neckline. So if the market is in a downtrend, it will come impulsively, then correction, then it will reverse back to the opposite direction. Then if the market is in a continuation phase, that the market is in an uptrend, like uptrend, correction, then continue to the same direction. That's the same that happens if the market is in a bearish. So the market will come to the downside, then packs candles, then it continues to the downside. So this is just a foundational way, a foundational basics on how you can approach the market. And before you involve so many other things like order block, what order block, FVJ, those indicators, and so on. This is just a mere way on how you can read the charts in very clean without any indicator, just to understand. Just to illustrate now, like on this time frame, you can see something like this. You can see something like this, or let's use this. Yeah, so you can see these two phases. We have a phase here when the market was bearish. Then we have this phase where the market is indecisive, moving up, down, up, down, up, down, up, down. Then we have a next one where the market has given us a proper decisive move or decided move that the market has continued to the downside as the previous move. Hope this is easily understood. So we have the first phase, which is an impulsive phase, whereby you are seeing long candles, big candles moving to a certain direction, which is the bearish. Then we have so many candles packed together, small candles packed together. Then next, we see the market continuing to this direction. Hope that is easily understood, guys. Have we understood that? Just by show of thumbs up. Yes, that's good. Then I want us to look at this as well. So let's look at this as a reversal pattern or as a reversal move whereby the market is moving to the downside. The market has been moving to the downside in an impulsive phase. You can see big candles moving to a certain direction. Then the market has this phase where it packs small candles. You see, 1, 2, 3, 4, 5, 6, 7, 8, 9. I don't know how many candles they are in only this phase. Then after this phase, we see that the market now has decided to move to the upside. Just by thumbs up if you have understood, or if you have understood it clearly, you have seen it clearly. Just by thumbs up. Have you understood? We see that now this is a reversal, whereby we have a reversal movement here. At first, we saw a continuation, though I'm going to show you more. We saw a continuation, now I've showed you a reversal. They're happening on different time frames. This is a big move that can give you big pips. Then this is a smaller one that can give you smaller pips. This is something that happens every day. Then, not only that, we have another one here. Look at this. So we see that the market has been moving to the upside. Then it packs so many candles in here. Then it decides to move to the upside. I hope you have understood that, or you have seen that. That is a continuation phase. We have here another same phase, actually. Just to show you, because I told you guys, the market moves in the same phases. It just keeps on repeating. Just you have to understand that now it is breathing. Just like you may be running and you decide to pause a bit, then you continue the same direction. You are going from A to B. When you reach B, you relax a bit before you proceed to C. That's how the market moves. So the market moves from A to B, then it breathes a bit, then it decides that, now I'm tired, let me just go back. Let's say this is home, then this is a pitch. So you move, you run, you take a run from home to the pitch, then you relax a bit, you say, now I'm tired, let me go back home. So you move back to point home, where you came from. So that's how the market is. Or sometimes you'll be like, let me run from, as you're running from the pitch, maybe you branch by the cafe, take some breathe or relax a bit, maybe take some coffee or just stretch a bit before you continue to home. That's how the market moves. Have you understood? If you have understood, just by show of thumbs up. Yeah, hope this has been so beneficial to you guys. Hope it has been so beneficial. Hope it has opened your eyes on how you can approach the market or how you can understand the market the easy way. Of course, we are going to be sharing more of this. What you should do is those who are in the Telegram channel, unmute the channel, pin the channel, so that when we have a session like this, you will be learning something. Of course, so many people don't have the capacity of paying a mentor to teach you every day, but you can combine this knowledge and come up with a system that you can use to trade. So if you are having a better way or the hard way on how you were approaching the market and you are finding it so hard for you to understand this is the easiest way how you can understand this. It's very easy. Currently, I'm in Dubai. Those who are in Dubai, of course, I'm available for a session. You can have a one-on-one. If you can afford the session, if you can afford to pay for the time that I will sacrifice to share with you, because this is knowledge that is going to give you wealth, can make you rich, can make you wealthy if you put in the effort, because this is something that you can work as a side hustle that can bring in income if you have understood. So it has no price. You just have to negotiate with the person who is going to teach you. Because even if I charge you $1,000 for an hour, I'm giving you the same knowledge that is going to make for you more than 1,000. It's going to make for you 5,000, 10,000, 100,000, and more. So meaning the money that you pay is not really worthy. It may be worthy, it may be just something to facilitate a person who is going to share with you this knowledge. For those who are willing to have a one-on-one and you are in Dubai, of course, you can reach out and we schedule a meeting, then we link up. But for those who cannot, you can still DM, inbox, and we see how we can assist you on how you can easily understand the market. The market is so wide. There are so many things that you need to learn in order for you to become profitable. That includes psychology, also entries, risk management. There are so many things that you need to understand in the market. Yeah, for any complaint, guys, you reach out in my DM. Don't complain in your heart, or don't complain in your bed when you are sleeping and you start complaining. The signals here today are not working out. Today this, today that, today that, today they reach out and raise your complaint. Then we see how we can help each other in that way. Some serious note, I don't do mentorship. Sorry, I don't do investments, guys. This is Odin speaking himself. I don't do investments. If you are trying to pay money to someone, confirm that that's Odin himself. Make a video call. Make a video call to confirm, because so many imposters are there pretending to be Odin, is not Odin, and takes your money. Then at the end of the day, you'll be flagging Odin himself, saying he's the one who scammed you. Guys, we need to be careful. There's so many people there who are not really willing to put in the work. They are after your hard-earned money. Please come out to me, explain on a video call, of course. Then I see how I can assist you, but have it in mind, I'm speaking this publicly, YouTube live. I don't do investments, and I will never inbox you first. I will never inbox you first. I will never call you first. And I will never persuade you with quick returns, saying that you give me 500 today, tomorrow you get 1,000. It's possible you can trade and make that money, but I'm not going to promise you that. Forex trading is like any other business. It involves risks. You can easily lose all the money in a day that you have invested, and you can still make more in a day than what you have invested. So just put in the work, learn, then it will help you. If you are focusing on signals, looking for signals, signals won't help you in a long run. Rather, if you get the knowledge, it will help you in the long run. I always tell this to people. Don't fall for, you can be using signals just for clarity on what you have analyzed. And of course, for you to make the proper analysis, you need to learn this. So signals, account management, and other services, they are just there to guide you or to help you make some money on the side as you proceed on how to acquire this skill. Unless if you're a busy person, and you have your capital, you feel like, now me, I'm too busy, I cannot trade for myself, I just need somebody who knows how to trade. Yeah, you sit on the table, we advise you that, okay, don't do this, put the money into the account, then these are the terms and conditions. Know that there are risks involved and everything, Are you willing to comply? Are you willing to go? Are you willing to do this, to follow this and that and that? Then you can push, because of course, there are people who cannot trade for themselves. Otherwise, thank you guys for this session. Please subscribe to the YouTube channel. Join the Telegram channel. Keep around so that we can keep on sharing this knowledge together. Recommended broker, it's Xness. The link is in the Telegram channel. The link is in my YouTube. The link is in the bio. The link is everywhere. It's in the Telegram. Click on the link, register. Then we move as a team. You trade, I trade, we make money. Yeah, life goes on like that. But for any complaint, guys, please reach out in my inbox. Then we see how I can help you out. Feel free. Odin is not a very hard guy. He's not hard. Yeah, unless if he's busy, then it will be hard for him to inbox back or to answer the call. That's when I am busy myself. Otherwise, I would really want to end here and wish you a good night. Let's wait to see what the market has or has prepared for us tomorrow.